Welcome back. We're joined by a special guest this morning, Roopa Kudva, joining us of Omidyar Network to talk to us about some of the initiatives that they have taken during this time, and the most recent one being the Resolve initiative, which is aimed particularly at MSMEs and migrants. So we're going to get more details from her on that. Roopa, thanks for joining us this morning. It's great to have you with us. Now, Omidyar has been very proactive during the pandemic with the rapid response initiative as well in the first 3 months, and now the Resolve initiative coming in. Share with us your experience and how it has been dealing with the initial impact of COVID-19.
I think, like for everyone else, it has been very intense. I think words like unprecedented and all have been oft repeated in the last 4 months. But I think as an impact investor and as an organization which has a large portfolio of about 99 investees and grantees, and as an organization which is focused very much on the 50% of India's income distribution, a population that we call the next $500 billion, our focus has been really, yes, we are an investment firm. Our strategies are in development of thesis, choice of entrepreneurs, etc., is very much geared to a longer term focus. However, the pandemic is here and now. Its economic consequences are going to be here and now. So what kind of responses as an investment firm can we develop in the immediate term and then in the medium term?
Roopa, I wanted to understand from you, what are the kind of shifts that you've seen in terms of which are the sectors, which are the businesses that you think could survive and thrive during this time?
As you know, we invest in early stage startups, typically seed to Series B. And we have a large portfolio, and there we are seeing 3 sets of companies really. Number one is the companies which are in sectors which have been positively impacted by the pandemic. And these are not surprisingly digital businesses like EdTech, digital health, content businesses, essential retail trade. These segments, and there are many companies in our portfolio. On the EdTech side, we have Vedantu, we have White Hat Junior, we have Doubtnut. On the digital health side, companies like MyUpchar, 1mg. On the content side, there's a whole bunch from Daily Hunt to Pratilipi. These are all organizations and segments which are seeing positive traction.
All right. Going forward, Roopa, you've had some successful exits as well. We've seen that in the last year. What's the industry outlook now in terms of willingness to make fresh investments during this phase? Is it a little more tentative? Are you looking at a specific sphere of companies? What's the general outlook?
Let me begin with the exits. Yes, 2019 was a good year for us in terms of exits. We made 3 full exits and 1 partial exit. And what have been some of the learnings and takeaways for us? First of all, we are very delighted because every exit that we as an impact investor make actually is one step further in improving the impact investing model. So I think the exits really served as a good showcasing of the potential of the impact investing industry. Second takeaway was that I think they demonstrated that it is possible to have attractive exits outside of the financial services space. Because a lot of the exits so far had been in the microfinance space, which had done exceedingly well. But all our exits this time in 2019 were outside microfinance. In fact, we as a firm have no investments in the microfinance sector.
Right. Roopa, do you feel enough has been done to provide relief for MSMEs? And how is it that funds like yours can come in over here?
Let me begin by talking about the MSMEs first, and then I will come to the social stock exchange because I see them a little differently. As far as the MSME sector is concerned, I think that is why we have announced MSME as one of the focus areas under our Resolve initiative. And there we are really looking at what new solutions can one bring to the table in collaboration with other funders, in collaboration with think tanks, researchers, entrepreneurs, and the government. And we've identified 4 areas. Number one, amplifying the voice of SMEs with much more robust data, much more robust research, and much stronger feedback loops on the exact nature of the problems they are facing. Number two, stimulating capital in a risk-averse environment. We think it's not enough to just have debt and equity for MSMEs. It is important also to look at other financial structures, say, for example, credit guarantees or credit enhancements, which will really enable the flow of capital, and this whole scheme of credit schemes that have been announced really be able to activate them in a much more purposeful manner.
Sure. Also, Roopa, I wanted to understand, if you see the impact or rather impact investing becoming more mainstream in India going forward with traditional VCs looking at actively investing in the space.
Even before COVID, impact investing was gathering greater momentum, not just globally, but even in India. We have just had a report being released by the Indian Impact Investors Council, which has shown that the CAGR of impact investments over the last decade in India has been 25%. And the growth has significantly accelerated in the last 2 years. I think world over and in India, people, investors want to align their investments with their values. Globally, we are seeing a movement. In the US, we saw the leaders of the top companies coming together and 100 CEOs signing a declaration a few months ago saying that the purpose of the enterprise is not just to serve the equity shareholders' interests, but balanced value creation for all stakeholders.
Roopa, thanks so much for joining us today. It was good to have you with us, and it will be interesting to see, what really comes out of the kind of proposals you decide to back under Resolve as well. Up to about 15 crores, that's the kind of size they're looking at, but also larger funds available as well, for specific initiatives. That's where we leave it on the show today. From all of us, thanks so much for watching.